We will either find a way or make one. Hannibal Barca. My friends, that has to be your attitude if you're going to be successful in the long run in learning how to chart and be successful in the markets. Commitment on a daily basis, 10 to 15 minutes, that is all we ask. Everything on our charts up for the day, from stocks, bonds, gold, and Bitcoin. We see the S&P 500 up 1%. But what does the week look like? What's the overall mood? It is still down. Price percent oscillator still negative. Derivative oscillator gaining downward momentum. We have a red spinning top for the week. Long wick on the bottom. Bit of a wick on top. Price is below the weekly trend line on the weekly chart. And, of course, below the 2-day also. We go to the 2-day itself. You see there the prior 2-day candle, a big red down candle. This latest one that finished drawing at 4 p.m. today, we see a green spinning top, open box spinning top, indecision. Price percent oscillator negative heading up, derivative oscillator negative, losing downward momentum. Look at this half day. We can see 2.5 days, well, I'd just say 2 days of up movement. We saw the slowdown in the down movement there after a big down day on Monday morning, and then slowing down with that in the afternoon. And then we had that crossover going up in the morning on Wednesday the 22nd. Don't forget, markets are closed Friday for Christmas Eve. So tomorrow is the last day of the trading week. That is Thursday the 23rd. Consequently, we have sent out our weekly vertical crossovers already to our Patreon members, 20 of those, 10 up, 10 down. Please run through that list. Pick yourself a candidate or two to practice trade tomorrow. Find good ones. I particularly encourage you to experiment and see when you see things like the crossover on the price percent oscillator occurring at the same time that the derivative oscillator goes green. It didn't happen this afternoon on the S&P or this morning, depending on which way you look, the derivative oscillator or the price percent oscillator. We like to see them cross at the same time. That typically means that your leading indicator, which is the derivative oscillator, and your lagging indicator, the price percent oscillator, are in sync. That typically means that you're going to see a better run for that move. So that's one of the indicators I look for many times. It's not just the only thing, and it doesn't necessarily have to happen, but I feel a lot more comfortable when I'm jumping in a trade when those things are occurring at the same time. Also, Patreon members, I will be sending out tonight. You got a triple whammy. You have the weekly vertical crossovers, of course, this recording, and as soon as I finish today, I'm going to be recording Charting Crypto, where we will go through all of our crypto ETFs for you, including Bitcoin, Ethereum, things like the Bitcoin Strategy ETF, the Valkyrie Bitcoin. These are actually futures-based ETFs on Bitcoin. And then we've got other things like the Blockchain Bitcoin Strategy Index. I believe that's the one. Let's see, there's one of them here. The Bitwise is the one that's the 10 cryptocurrencies and is weighted based upon the size. So, of course, Bitcoin would make the most up, after that Ethereum, and then on down the line for the top 10 cryptocurrencies and other things that are there that are in the crypto space. So that's for our Patreon members. You want to treat yourself to an early Christmas? We've got a few slots left. Give yourself a Patreon membership and turn on the steam. Now let's go from the S&P 500 to the Nasdaq 100. Always start with your biggest chart. Again, red down candle, wick on the bottom, little wick on the top. Price percent oscillator is a little less than flat, still negative. Derivative oscillator gaining downward momentum. 2-day chart. What do we see there? We see a green spinning top after, again, a strong red down candle, very similar to the S&P. Derivative oscillator still negative. Price percent oscillator still negative, heading up a little bit. So still overall lots of downward pressure. We do have 2 days of up movement, very similar to what we saw with the S&P. We saw things cross over in the morning and moving up. Now, one thing that we did see is you notice that the price percent oscillator didn't cross yesterday afternoon. It crossed over this morning. This is more of what we're looking for, the derivative oscillator and the price percent oscillator crossing over at the same time. Now, this is a short chart. This isn't a weekly chart or a 2-day recross. I just wanted to give you an idea as to what I'm typically looking for when we are trying to find good candidates on our weekly vertical crossovers. So that's where we are in the S&P and the Nasdaq 100. What's the big thing to remember? Still lots of downward pressure on stocks, even though it was a bit of an up day with the S&P up 1%, Nasdaq 100 up 1.19%. What about 20-year government bonds? They are up 0.46% for the day. Now we can see that we got a lot of trend lines right here around what we can see is a red spinning top, long wick on the bottom, a little bit of a wick on top. What is this about? Well, the price percent oscillator is still positive, a little less than flat. Derivative oscillator positive, losing momentum. So overall, still some upward pressure there, as shown by our price percent oscillator. And the 2-day, the reason we have this vertical line here, it's a 2-day crossover going down. If for any reason you were still in that trade, this is always your last hurrah, that you better get out when this occurs. Otherwise, you're really asking for trouble. Now, there's plenty of reasons to have gotten out much earlier. It would have been great to get out after riding up that 8-day rise and really taking profits at that point. But this is your last warning, sitting right there on the weekly trend line, passed through the 2-day trend line, and now we have a crossover going down, which of course causes us to look for some way to redraw this trend line and see if we can't really connect much of anything. So not too helpful there. But we do have a 2-day crossover going down. It's not a recross. Why? Because the weekly's going up. It would have to be heading in the same direction as the weekly after a pullback. We look at the half day, you can see that it is still negative. And even after a day of up movement and a slowdown in that down movement from Tuesday, still not enough energy to cross over. So we still overall have some energy for continued up move, at least on the weekly, but really being killed and pulled away by the 2-day. So we wouldn't be in a trade at all this time on 20-year bonds because of that conflict between the weekly and the 2-day. Now, what do we see with gold? Well, we see with gold it's up for the day 0.94%. Now, gold went down for 3 weeks and then sideways last week, this week trying to gain some momentum. Kept thinking it might cross over going down. Hasn't happened. The derivative oscillator's gone negative on us this week, but that price percent oscillator is trying its best to pull away from the red signal line. Open box green spinning top, so still positive there. 2-day inching ever so closer to crossing over. Now, if it crossed over going up and the weekly is still in a confirmed up move, what does that mean? Well, that means, of course, a 2-day recross. Hasn't occurred yet, didn't occur. Now, when could it possibly occur again? Not until the markets reopen on Monday. Why? Because Thursday is the first day of the latest 2-day candle. That latest 2-day candle will finish drawing when? It'll finish drawing on Monday. So the nice thing to see is that the derivative oscillator is going green. We'd like to see them both cross at the same time, just not quite enough energy. Price is sitting right there, trying to push above that 2-day trend line. Now, that's not a trend line to put a lot of emphasis in at all. Look at the half day. You can see where it had sprung up for a day and a half and then down for 2 days, and then over the last day trying to move up, pushing through that not so good 2-day trend line. At the end of the day, price percent oscillator heading up, derivative oscillator gaining some upward momentum. So overall, gold's trying to get somewhere. We will see if we have that 2-day recross on Monday. Now we'll go to Bitcoin, up for the day 0.81%. Now, Bitcoin red down candles for what, 5 weeks? This latest is a slowdown in the down movement. Solid green means a slowdown, doesn't mean green open box with bounding up movement. but it's not a bad sign. We can see the price percent oscillator slowing down in its down movement. Derivative oscillator still gaining downward momentum. When we look at the 2-day, we can again see where this latest 2-day candle, a green spinning top, we do see up movement there with that wick on top. Price percent oscillator negative but flattening. Derivative oscillator negative, losing downward momentum. And of course, we can see 2 days of nice up movement in Bitcoin on that half-day chart. And of course, it's been green for a while and gaining upward momentum on the derivative oscillator. So again, we'll wait and see. Still have a lot of overhang of down movement on Bitcoin. So in no way are we saying these down problems are over, but we are watching, waiting, and hopeful. Again, if you're interested in cryptocurrency, start by learning how to chart Bitcoin with us. Buying at the right time is ever so important for success in your practice trading. That's where we are, folks, as we end the day, going into the last day of this shortened week for the holidays. So we'll give you one more training tomorrow. And of course, that will be our weekly review and forecast for the shortened week. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.